Hello guys, what is happening and welcome to this live stream. So I wanted to bring you a quick update on what is going on with the British pound before I go out here. The thing is, the pound crash is spreading into the bond market now. This is not good at all because it means loads of people and businesses are going to go bankrupt as a result of this government announcement. Now, the thing is, this government announcement was obviously designed to stimulate the economy, not collapse private businesses, surely. But the thing is, guys, the UK media is one of the best manipulators of people in the UK. Still, a large chunk of people in the UK read newspapers and they go to the same media sources that are essentially controlled by the government. Because when you look at private enterprises in the UK, they only account for around 30% of all business. A lot of the business, over 50% of the business now, is public sector, and that surged during 2020 by a record amount. But that you don't hear these things on the mainstream media in the UK. And it's interesting to, from the outside, look at the way the US media, the Canadian media is reporting on this compared to the UK media, because it is inherently different. And that is something really worth considering, because it just shows how people in the UK are being manipulated. Now, I'm going to be doing a video that's more in depth on everything that you can do to protect yourself with this currency collapse that could be happening, and we will see where it continues to unfold. The pound this morning went on a tear all the way down to 103, and right now it's up about 0.5%, I think, but that could merely be a dead cat bounce. And what I'm really keeping an eye on right now is what's happening in the bond market, which is completely insane because yields are jumping again. Corporate debt is just trash right now, and that is not good news for businesses in the UK. Now, part of the reason that this is such a bad thing that the government announced is the energy subsidy that they announced. They have no clue what the actual total cost of that is going to be. If energy prices absolutely skyrocket this winter, that could put the UK in a very, very precarious place. The thing is, this isn't being paid for by actual money, it's being paid for by printing money. And there's an inherent difference between the two. Essentially, the government is having to borrow. That means that they are printing credit, which means new money goes into the supply, which drives up inflation. And all these things are just not well when the UK is already facing decade-high levels of inflation and an energy crisis. I mean, trying to come out with these sort of policies right now is essentially like just stabbing yourself in the back. So one thing that I want to go over here is CDSs. So credit default swaps are surging in price. And this is on the back of the fact that people think that now there's risks of the UK government actually defaulting. Think of a credit default swap like an insurance policy when you go out and buy a piece of UK government debt or corporate debt. You can then buy a credit default swap to offset the risk in case there is default. And now the yields are skyrocketing so much on all this debt that so are the insurance policies against this debt, which is just absolutely insane. And I saw on Bloomberg that they now reckon that there's a 60% chance that the dollar and pound will be at parity before the end of this year. That just has huge ramifications for the people in the UK and the global economy as a whole, because the UK is a financial hub just like Japan is. And you know, there is a lot of stupidity also going on in Japan with monetary policy over there. I mean, you recently saw the BOJ come out and say we're going to buy yen. They did that. Yen is still falling. They literally took from the playbook of the UK in 1987, where the Bank of England tried to buy pounds and again couldn't do anything to prop up these markets because they are so large. And this is what people don't understand. And I kind of explain it like this. Imagine you're on a ship sailing into a hurricane and the central planners are trying to manipulate the weather. That is what they are trying to do when they interfere with the bond market and when they interfere with the FX markets. They have no clue or understanding of these markets and what they're doing, and they are just simply out to lunch, as we know. So credit default swaps are going up. They are going up a lot. That is not a good sign. And then the other thing that I want to bring to your attention here real quick before I leave this is the bonds in the UK just absolutely skyrocketing. So the 1 year is now up another 0.5%. The 2 year is now up more than 0.5%. The 5 year is up 0.5%. And all the way to the 30 year, you're now looking at 4.3% on the back end of the curve for 30 years. It's absolutely insane when you really think about it. Look at where the US 30-year Treasury is at right now. You can see right there, it's at 3.63. And if we go back to the UK 30-year, it's at 3.28. So there is a massive difference. There is no hiding from paying these higher interest rates for the government. The government now has to pay these higher interest rates. They've gone up nearly 1%. And some of these policies are just utterly ridiculous when you think about it, because the jumps in interest rates because of what has happened here in the bond market mean that this stamp duty cut, which is being paid for by debt printing money, is been wiped out and more. It's been wiped out, and probably the savings from that stamp duty, you can add on and you can times it by 3 and probably get to now the interest rate costs that have risen since just Friday. The gilts have jumped 1%. That is absolutely insane. And if it continues at this rate, the UK government will be in default. And if the bond market even sniffs out a chance of the UK government defaulting, you end up with Greece 2.0. But it's way worse than Greece 2.0, because with Greece, at least they had the euro backing them. The pound is its own currency of the UK. There is no euro backing them. So who would be there to bail out? Would they have to do an IMF bailout, which would essentially mean massive austerity and just a... the situation in the UK needs to be reined in, and I don't know how they're going to rein it in. It's going to be interesting to see, and I hope they do rein it in. This is not something that I want to see continually happening, but the UK seems like the first domino that is falling down right now in the global economy, and it will not be the last. That's what I want to highlight. Canada will be in a similar situation in not too distant future. In fact, the loonie is dropping quite heavily, and it has been over the past couple of weeks because the bond yields have actually been stabilized, and that stabilized could be coming from domestic buying, because we are heading into a banking crisis, essentially. So there's warning signs happening all over the global economy right now that we need to be tuned into. And I'm going to get a video out as soon as I can on how you can protect yourself, but it's really not that difficult when you really think about it. You've just got to, in my opinion, gold is insurance on your money. If you look at where gold has gone to the pound, it's actually really interesting and gives you an idea of what happens with the gold prices. And the gold price has been incredibly suppressed because of what's been happening in the US. The dollar rising generally brings down gold prices. So gold is actually trading at a discount now for the pound, believe it or not. So another thing is US dollars, obviously, but going into US dollars right now is pretty risky, because if they do come in and do something drastic, which actually manages to stabilize the currency, you could end up losing lots. So it's very, very difficult, very, very difficult. And this is why you diversify. I have always said on this channel, and I hope you hear me loud and clear on this video, to diversify. Do not have all your eggs in one basket, because when things like this happen, it is very, very bad news. So anyway, guys, I hope you got the message from this video. Again, it's not exactly a great message that I'm bringing you today, but it is one that you should take note of, because it is a time to diversify right now. It is a time to safeguard yourself against the crashing global economy and the central planners that have no idea what they are doing. So thank you so much for watching, and I will see you on the next video. Peace, guys. Bye-bye.